Good morning, good afternoon, everyone, and welcome to this month's edition of AML Voices, brought to you by AML RightSource. I'm Elliot Berman, Marketing Thought Leadership Specialist here at AML RightSource, and I'll be today's moderator. We're thrilled you've joined us for today's AML Compliance Best Practices session. As financial crime tactics evolve and regulatory expectations change, AML professionals continue to adapt quickly to maintain compliance and mitigate risk. Today, we'll explore the challenges and emerging best practices in anti-money laundering compliance. I have an excellent expert panel with me. Let me introduce them. Corey Wells is SVP and BSA AML Fraud Compliance Officer at First Federal Bank. Jonathan Fox is Director of Financial Crimes in the Financial Intelligence Unit at First Citizens Bank. And Terry Pesce, sorry, Terry, is the President and CEO at Terry Pesce and Co. Terry has been a lot of other places too, and she also serves on our North American Advisory Board. Before we dive in, just a few quick housekeeping details. Today's session is being recorded and it'll be available on our website shortly after the event. Please use the Q&A feature to submit your questions anytime. We'll address as many as possible during the duration of the discussion. And with that, let's dive right in. So what are we going to cover today? We're going to talk about a number of things in this space. Uncertainty of the regulatory environment, resources and technology, insider processes review, board and executive management interaction, review of onboarding procedures, customer risk rating, and I'm sure we'll wander into some other things too. I want to start out though for a few minutes and have a conversation about the concept that best practices really is a mindset rather than a goal. And so I'd like to start with this idea because I think it's a great framework for the rest of the conversation. But I'd love to hear from each of the panelists what they think about that. So Terry, you want to kick us off?
Yeah, I mean, I think it's an evolving mindset. Not only is it a mindset, but it's sort of evolving based on a lot of the guidance that's come out recently from FinCEN and the other regulators. And best practices has usually been keeping at least ahead of the regulatory guidance, and now we're hearing more that regulatory guidance is really not running the show anymore, if you will. That what examiners are going to be looking at least they're being told they're going to be looking at, is violations of law, regulation, or anything that addresses financial safety and soundness. But there is I think, a move back from what we traditionally thought of in the AML space as best practices. It's a bit of a moving target. I'm sure others have seen this as well, but there's new regulators where making about from FinCEN about under what circumstances examiners can issue MRAs, which is significantly pared back. Of course, there's the new SAR guidance out there, which significantly pares back, I think, what the expectations have been about SARs. And there's a concern about debanking in a way that's different from the way we looked at it in the past. So in the past, I think we looked at de-risking and worrying about not banking the unbanked. This is a very different environment, but I don't want to monopolize because I think I've touched on a lot of different subjects here. So it's a long-winded way of saying best practices is a bit of a moving target right now. That said, I think we have to stick to our old best practices because these things could change. So,
Jonathan?
Yeah, I mean, I'll take a kind of optimistic view on that. I think in light of some of the regulatory feedback guidance, just generally what we're hearing out of Washington, right? That I'm taking it to mean that, right, the best practices are going to able to come to the fore, right? You're going to be able to kind of define best practices for your institution rather than have to adhere to a kind of checkbox, really follow a playbook as set by the regulatory agencies, which is not to say that they're not doing fantastic work when they're coming in and pouring over all this work, but it's a little more general as opposed to right now. I like to think that we're moving towards a much more tailored, a much more customized risk management environment where you will benefit and your institution will benefit from really understanding who it is that you bank, who it is that you do business with, and really addressing those risks to a pinpoint rather than broadly. So again, that's maybe a little bit more optimistic than a lot of folks have put out there, but I'm choosing that route now. And yes, always evolving. I think that's a hallmark of a great financial crimes risk management program, right? We're not static. Everything is changing around us, whether it be tactics or technology. We need to keep up with that. So I'll leave it there.
Corey.
Yeah, I agree with a lot of what Jonathan said, and I'm very hopeful that that's the direction that we're moving toward, where we can tailor our program to our institution, our unique risks, and develop best practices based on that. I think from my point of view, in the day-to-day best practices, there's always an opportunity to find them every day when you're in the grind, when you're in your daily work, and when you're getting feedback from your teams. And a lot of times, I will say from personal experience that the time when you find those best practices are when you have found a mistake, you have found a hole, you have found some place where you've lost money or you've missed something, and that's where those best practices you can really find them. So audits and exams are definitely an opportunity to find some of those best practices, but my philosophy has always been, I'd rather find them, my team, we'd like to find where those best practices come in.
Yeah, just one more point, if I might. I mean, you're both absolutely right, and hopefully where this will go is you will be able to define your own best practices, because one of the things we're hearing is that regulators or examiners are not supposed to substitute their view of what best practices are for your institution. And that's, that would definitely be a helpful thing. If we're actually looking for what matters, what are the bad things we should be finding, as opposed to the tick the box exercise.
If nothing else, it's hopefully more space to have a dialogue where
Yes.
you're able to present what and why you view as important. And Corey, to your point, right, it is in the grind. It is in the day to day.
Yeah.
And as lame as it sounds, like just communication amongst your group, amongst your partner
Yes.
groups is going to help root out, identify, and adapt, mold your best practices to, as you learn, right? I think we're all coming from a number of different places. People have been a lot of different spots. You kind of pick and take, and you just learn over time as you get more comfortable where you're at.
And it follows things we've seen in other industries. 20 years ago, the big buzzword in manufacturing was constant process improvement. It turns out that that's not just about building widgets. It's really about everything. You're seeing it in healthcare, and we're certainly seeing it in our industry today. So it's having that, at least from my perspective, it's having that view that whether things are going well or we hit a bump, we should always be looking and see, kind of self-testing. Is this, we've done it this way. It's worked, presumably. Maybe it's failed, but mostly it's worked. But that doesn't mean with the changing environment, regulatory and operating, that we don't need to keep at least checking in on ourselves. And so, and as Corey, I think, as you pointed out, you have exams and you have internal audit functions. You even have QC functions. Those are built into the system, and that's good. But the people who are using things often know the most about them.
Yes.
And that's where I think
Definitely.
you can get a lot of leverage. So uncertainty of the regulatory environment, everybody's already mentioned that. You can't really look at anything published within our industry today without it having a line, at least, if not the whole article, be about that. we've seen some big picture, lighter exams, heavier reliance on internal audit reports, risk of complacency, loss of focus, implications for the future. The regulators haven't talked about that, but I'm certainly seeing writers and commenters, and I'd like to talk about that as we go. Changes to the SAR requirements, Terry, as you mentioned. So I want to start with Corey and Jonathan because they're in banks, and then we'll go to Terry on this. With all these announcements, OCC, FDIC, FinCEN, uh, with all these changes, how are you actually responding to this in your programs? So, Corey, you want to start?
Sure. Okay, so I'll start with just the latest thing, the SAR FAQs, because I think that's on top of everybody's mind. And Jonathan, you can probably speak to this too. When it came out, your team was like, "Oh my goodness, do we not have to? This is
Yeah.
amazing, right?" And this is a lot less work, right? Okay, so I'm hopeful. I'm optimistic about where this is going, and I love some of the comments that have come with the FAQs, especially just getting us back on track with like our structuring SARs and understanding like, is it truly structuring? Are you just doing it defensively, or is there something else there that we really feel is suspicious in addition to the structuring and the avoiding the reporting? So I think that was my favorite question on the FAQs was around structuring. However, as far as at my bank, everything is the status quo right now. We're still doing all the same things because at the end of the day, the FFIEC manual hasn't really changed to reflect what has come out from FinCEN on those FAQs. So while I'm hopeful and I'm excited about some of those answers, I have to wait to see what the manual, if that's updated, because that's just from my reading of the questions and also getting my peers' input from it. That's what's kind of missing right now is the update to the manual before we're going to make some major changes in what we do in the day-to-day.
Jonathan?
Yeah, I mean, we had a similar initial response when the FAQs were laid out. Again, I had the opportunity to attend ACAMS in Vegas, where we got a bit of a preview for that. And I think everyone was kind of going, what is this going to look like?
Yeah.
And at first, the read was, wow, hey, this feels like a really, really massive sea change if you kind of breeze through it quickly. And then when you start to get back into the document and read about, a lot of it is, hey, we are reiterating what is already out there.
There.
So
Yeah.
more than anything, and I would say organizationally, we took it as it's more for the people doing the looking rather than the people doing the work, right? I will say, yeah, on the structuring front, it's emphasizing, is there something there, right? Not just
Right.
filing for filing's sake because things are approaching, a threshold amount or kind of some preset definition. So I mean, I think it gives further comfort to, hey, this is a risk-based approach. We want to be able to tell a story here, right? We can try and divine some intent out of these transactions before blindly filing a SAR, which is a good thing.
Yeah.
The other FAQs, in terms of how we've responded as an organization, at least on the AML side, we are taking more of a risk-based approach to continuing activity reviews. Again, just we have finite resources. I think we're going to talk about constraints on resources a little bit later at some point, but really wanting to be able to put our investigative capacity where it's needed. So some of these one-off, two-off transactions, right? We're going to take a look, and if there's no further impetus to look, no referral, no alert, no law enforcement follow-up, we're moving towards taking a risk-based approach and moving on from conducting a full continuing review. And I was actually really surprised at how strongly both the line leaders as well as the individual contributors reacted to this. It was, hey, what if we miss something? And hey, everything is risk-based. It's all right. Again, we've got finite resources. We can't throw everything at everything. So on one hand, it was really heartening to hear from the team, which I kind of expected in a good way, again, that what if we miss one little thing, which goes back to the mindset and holding yourself to a high standard. So yeah, that's really how we're tackling it in terms of documentation. The last question, which I actually missed, right? I think the document is a PDF that's a page and a quarter. I read the first page and went, okay, good, succinct, move on. And went back and said, no, there's a fourth. Around non-SAR documentation. We've made no changes there. We say we have pretty robust documentation standards. And the thinking there is it's not required, but how else are you going to be able to tell that you did what you did and what existed when you did it?
Yeah.
So yeah, no real big changes.
So I'd like to, as Corey, I think you mentioned, the SAR FAQ is in the top of mind. It different people have had different reactions,
Yeah.
trying to figure out what to do. But I just want to touch on a couple of the other components. One of which is, and it's too soon for anybody to have had an exam, um, since the change. But some of the hints at the changes to the exam process, the heavier reliance on internal audit and things like that. What's the thinking in your institutions? Have you had conversations, for example, with your internal audit team about, so what are you going to do now? Because I don't want to say they're going to be the regulator, but it feels like their work papers are going to be even more valuable to regulators than they have been in the past. And they've definitely been a component, certainly of all the exams that I've touched, either when I, had clients or when I was inside an institution. First question was, let us see your, first at the top of the list was pretty much policies and procedures, internal audit reports was
Yes.
kind of the sequence. So what's happening, Jonathan, what's happening in your institution about that?
So when the guidance came out, the FAQs, excuse me, came out, we were in the middle of audit. So it kind of happened in real time. So we haven't had any, at least at my level, any real discussions on how that's going to affect moving forward. But in general, I mean, I think an emphasis on the internal audit work papers it again benefits institutional knowledge. It benefits a strong team conducting a really thorough internal audit, coming from a place of knowing who the bank or what the bank is, who they're banking, what the work should look like, and what is actually being produced. I suppose if it's a weak product, right, that kind of covers everything at a high level, might steer the regulators off. And if it's a really deep dive, really thorough, it could send them down rabbit holes. I don't know. I think it's been too soon to see how the regulators will actually react, actually take it, and what they'll, how they'll treat a strong, thorough report versus a very high level kind of perfunctory report.
Yeah. So I had an OCC exam. We're OCC regulated. We had an exam this summer, and right before that, we don't have an internal audit team, so we have a third party audit firm that comes in and does our internal BSA audit. Everything the OCC did during their time was based off of that internal audit report. It was for me, I mean, it was kind of pleasant because I'll say it was kind of like the lightest touch that I've had on me, and like the requests were less because they were relying so heavily on that report. The firm that we use, they have great, very detailed work papers, and the OCC seemed to love that. They had no feedback about anything lacking there. So that was a good thing. But it was different for me because I mean, Jonathan, you can probably attest to this. In the past, the regulatory exams, they were, I mean, yeah, they got that audit report, but it was like in your face, asking for stuff all day long, lists of questions, lists of additional requests in addition to what they asked for before they even stepped foot in the bank. So it was a major shift, I will say, this year in the way that the exam was performed. So I think it's really important, whether you have an internal audit team, whether you have a third party that's there, that you dive into the scope, that you talk about, like next year when we have it, we'll talk about these SAR FAQs. We'll talk about how they're incorporating that, how they're going to use that and look at our institution. Like I said, right now, nothing has majorly shifted in what we're doing, but we want to make sure we nail down all of that in our scope and make sure that we have everything in line with your audit team so that when your examiner comes in, you're ready to give them that and they have everything that they need.
Corey, we had a question come in from an audience member asking if you're willing to know that, excuse me, share the name of the third-party vendor that you use for that.
Yes, RSM. RSM is who we use, and they're a national firm. So I'm sure everybody's heard of them before.
Okay.
Mhm.
Terry, feel free to comment on these other things, but one thing in particular that I wanted to ask you about is, um, there's been some discussion that a wave of deregulation could create a risk of complacency and loss of focus. Um, you don't have to have been doing this too long to remember 2008 and 2009, where a lot a lack of focus on credit standards caused a minor hiccup in the financial um, economy in the U.S. But what are you hearing from clients, and how are you counseling them about this? Can you, and I'm going to be very simplistic about it, how much of this stuff can I turn off, right?
I,
To
I,
now
I think the answer to that is probably very little because, as soon as you turn around, it's going to change. In 2008, not only were they not focused enough on credit, but when, what hit the fan, that they took their eye off of AML. And I think that there was a bit of a reduction of focus on AML. And then, in the ensuing years, there were a lot of enforcement actions because of that, because they had taken their eye off of AML. This can be quite cyclical. I mean, these things change with administrations often. So I don't necessarily see this being I don't know that this is going to be a long-term shift. So I think you just have to be cautious. I mean, are there certain things that you can back off on a little, or like they said, like our folks said, risk-based approach to a tick the box exercise? Sure, but do you really want to stop keeping records of why you're not filing SARs? I think that probably doesn't help, because if a matter alerts again, you want to know whether or not it alerted before. So, you want to be able to see that. I think, to Jonathan's point, you do risk-based review on continuing activity. I don't know that you want to solely rely on whether or not your system is going to alert again on continuing activity. So I just think we need to be cautious in backing down too much, because I do think it can change. Plus, the other thing is, these things tend to take a little while before they make their way to the examiners in the field. I think, Corey, you were lucky if they took a lighter touch using your audit report, but you'll often find that the examiners in the field are not quite completely getting the messages from on high to back off. The
Agreed.
same with DOJ, which we can talk about in a sort of another breath, but I think there's still focuses that are not necessarily consistent with the change of focus for the administration.
Yeah, I think, Terry, that's a great point. Over the years, um, I think we've often seen that the examining teams are using a little different playbook, probably a little behind the latest pronouncements coming out of headquarters. Um, and we end up having conversations with those regulators like, well, are you aware that 2 months ago, and then you hand them the announcement that came out, said this, and so you can see where we changed our process, but it was based on, in part, on this. And you get a kind of a quizzical look. Oh no, I'll have to read this and check with my supervisor, kind of thing.
Yeah,
These
I mean,
changes which I think are, as you've all pointed out, they've got a certain subtlety to them. It's like, well, okay, maybe from a regulatory perspective, we're going to say you don't have to do that, but there are business reasons, our own process reasons. Uh, you, not keeping track of why you didn't file a SAR the last time puts you in a funny position if that same customer, that same suite of accounts, all of a sudden is alerting all over the place. It's like you wouldn't want to rely on. So does anybody remember if we've seen these guys before? That doesn't feel like even a
Right.
better practice or a good practice. So,
But
maybe it's not as, we don't need a stack of paper this big. We need a stack of paper this big, but you need something. It can't just be it went away. And so
yeah,
there's no history. We don't have to worry about it. That makes no sense.
I think one of the challenges the banks are probably going to face is, we're not the only ones reading the news. Senior management and the board is reading it too, and they may say, "Well, you have to do less, so you don't need as many resources." And I know we're going to speak about resources at some point, but I
Yeah.
have seen this with one of my clients in particular, where it's like we don't have to close any accounts. So, I mean, when the
Yeah.
reality is, maybe you're still taking a risk if you keep those clients on whom you filed multiple SARs. So.
So now we've already touched on it, but let's change our focus a little bit and talk about resources and technology. So, Jonathan, we've seen a significant increase in the number, size, sophistication of financial scams and frauds. What are the resources and technologies that you're bringing to bear in your program to respond to these issues to try to stay ahead or at least not get too far behind the scammers?
Sure. So full disclosure, we are separate AML and fraud investigations teams. Obviously, a ton of overlap, but um, on the AML side, we're actually in a really interesting place right now. When I joined First Citizens Bank, I think we were on 4 different case management platforms. We have whittled that down to 2, and we are now in the process of moving to 1. And that move from the 2 to 1 will also coincide with a sea change in how we're generating alerts and what we're generating alerts on. So there's a massive, massive amounts of change. I will say, with the proliferation of all of those schemes, the indicia in most instances is pretty consistent across the board. And you're still answering the same, where did the money come from? Where did it go? How did it get there? And does that make sense? Um, Obviously, we're seeing a lot now. It comes down to, with a lot of these fraud schemes, scan schemes, rapidly credited to, rapidly debited from accounts, right? That's kind of old school AML that we're picking up on. So from a technology standpoint, obviously drilling down maybe some external party monitoring rather than moving away from purely client focused. But it is a lot of those traditional red flags that we're still on the lookout for. I think the difference now is just um, really understanding what it might represent. Going back to the lighter regulatory touch too, whereas historically you might file a SAR saying, hey, this doesn't make sense. Now there's more of an emphasis on this doesn't make sense. This is why it doesn't make sense. And this is what we think it might mean, which is always what you want to put together in a kind of a well-crafted filing. But we're all under various constraints. So again, from a tech standpoint, it's less so, and it's just training, coaching, and having good people that know what they're on the lookout for. A lot of it comes back to that. So that might be a lame response, but that really is where we're at.
It's not a lame response, and I think it speaks to the reality of how all of this happens. If we just go back for a moment to the previous topic about lighter regulation and things like that, one of the things that to me really came out of all those pronouncements is they're written by people who've never had to do the work. And so, to the extent that the mission was reg relief, well, you don't have to keep records of your no SAR decisions. Well, it's like, okay, I mean, yes, that's reg relief, but did you ever think about why you keep that? It's not to prove you made the right decision. it may have been viewed that way by some examiners for a while, but it really is the part of the proof text of your process. And um, it felt like that was missing. And so I think we'll have to see whether that gets more a better view. Corey, one of the things we talked about when we were prepping for this is the how to use resources and technology to bring more efficiency to your program. Can you talk about how you're doing that at your shop?
Sure. So I think all of us and Jonathan can attest. I mean, when you're talking about human capital, that's always the hardest sell, right? More people. Okay, why? You're going to get a lot of pushback on that. So we have to see, like, as far as from a human capital standpoint, what am I getting out of these folks? What are they doing? Allocating tasks appropriately so nobody is overburdened while somebody is left. So making sure we're doing that analysis from time to time. Or when you start getting requests for like overtime or people are burnout, okay, let's see what we're doing with what, right? So you have to do that because the request for more FTEs is always a hard discussion to have. So you want that to be like your last. I feel like for me, that's the last resort. I have to be able to show and prove that this is why we need more people, bodies. But from a technology standpoint, I think that in some ways, getting some extra technology is a little bit of a easier sell. Now, anything where the bank's going to have to spend money for on a compliance type resource, that's a harder sell, right? Because we're not making money for the bank. But again, the same process goes into place. What current technology do we have? Are we getting the most out of it? Are we squeezing as much juice out of it as we can? And then talking with your vendors, what's coming next out of this piece of technology? What's your roadmap for this piece of technology? The improvements are there. And then we hear all these buzzwords in AML, right? AI, machine learning. Jonathan's nodding his head. Yes, we hear it all the time. And those things, I think, in certain elements of what we do in our work, that those can be really helpful. So right now, my team is looking at pieces of technology that maybe can stand next to or on top of our existing platform and give us that relief, those little efficiencies that can help us to grow as a bank, but not maybe take on as much human capital and give us that little wiggle room. So some of the things that I'm personally looking at right now from an AI or machine learning standpoint is technology that can help me with sanctions, name matching, anything there. Because I think that's a really good use of some of the AI that's available, is helping you with your name matching versus kind of what we have in our older AML systems that are just certain settings, to help you, Levenstein, whatever it is that you're using. AI can help with a lot of that. I think another thing is the way AI can help you in your writing, because everything that we do is written. So we have to write SAR narratives. We have to dispose of alerts, whether we're going to escalate that to a case or whether we're saying this really isn't suspicious. So how can we have AI help us when we're doing those tasks that involve writing? Can we make it easier for them? Can we suggest language? So that is, I'm on the hunt for that, whether that means a piece of technology that can help with that, with what I already have in my AML monitoring system, or if that means pulling the plug on what we have because they're not really moving in that direction for several years, and are we going to replace it with something else? And again, you have to have these conversations with your board and have them buy into it. And I know we're going to talk about that a little bit later in our discussion, but that's kind of where I'm at right now at my institution.
Corey, have you seen any? Oh, sorry to cut you off, Terry, please.
No, I was just going to ask you both a question, actually, which is whether or not you're getting any pressure from on high to say, like, can you use AI to reduce your costs and reduce your headcount? Because
Yes.
when they read the paper that Jamie Dimon is reducing headcount by X number of people
Yes.
by using AI, I mean, maybe in many facets, but that's out there, that there's a thought that AI could replace what you do.
And can I speak to that, Terry? Because that's such a good point that you brought up. And I think Jonathan will probably have points too. But That's the thing. They love AI. My board is like all about like AI, right? And I'm actually going to the board meeting next month to discuss this, but I think AI and the efficiencies that we could get from it with our existing team, I think that it's more about not replacing humans, it's reallocating them to something else. Because my institution is like we are overrun with fraud, and we have a separate fraud area, but I have people, bodies in AML that if I could free them up, could I give them to fraud and help that area out because they have the same skill set, or mostly the same skill set, right? So that's where it's AI. I'm not looking at it as a tool to get rid of my existing people and take away their jobs. I'm looking to take the staff that I already have, the number that I have, and put them where they need to be.
We actually have not been, at least as far as I'm aware, receiving any pressure to try and replace or really augment with any sort of AI. But I mean, I think from an investigation standpoint, a couple of the places you could get a ton of lift are things that exist and have existed for a long time that kind of fall into this AI kind of umbrella, that being machine learning, right? Reducing false positives. Again, that it all comes back to people doing stuff right, right? And that being what you're learning off of, which it kind of always comes back to the person, which is interesting to, and then that's where I try and bring those conversations with anything related to AI, or robotic process automation, right? Going back to documentation standards, what we're expected to go get, right? That might be going away, but there's still stuff that we want to grab every time. In some instances, I'm thinking trawling your internal systems for relationships, right? I think a lot of us probably have sprawling internal systems. There could be 9 different places you got to go look to see if a party is a beneficial owner or is a signer on another account, anything like that, where a computer could do it a lot faster and a lot more efficiently. You still have the added benefit of a well-trained person with a lot of gumption that is able to kind of fill in gaps, but they need to know where those gaps are. So, no, long story short, no, haven't really had any pressure. I am very pessimistic on the generative AI side. Just maybe it's the podcast I listen to, but not a lot of hope there. For what it can bring us just in terms of putting together any finished product that has any sort of complexity to it, at least where it is right now. And again, it goes back to what's it being trained off of, which hopefully is fantastic, amazing work at all of our institutions at all times. But I mean, the truth is, I don't know how we get to the place where you have something that's generated that makes sense and is accurate. Think about all the underlying data issues that I think every institution has, right? That requires a person that knows what they're looking at to be able, hey, I got to move this, something as simple as I got to move this text from this column over to here half the time so I can tell where this money started or where this went. So there's a lot of intricacies that the computers haven't quite figured out yet. And I don't know enough about the technology to know if it'll get there.
And talking about generative AI, I mean, just looking at some of the output from time to time, it's not always right.
No.
It's often wrong. And if you're going to spend as much time doing QA on your AI, then kind of what's the point? It's not time saving. To your earlier point, I think there's some very powerful technology that we'll get to, but I don't think we're there yet.
Yeah, my experience in reading a lot of material generated by generative AI first, I agree with Terry. You need to know the territory. So when you read it, you know whether it got it right. But the quality of the writing, it's it's really in a lot of cases, it comes out very generic and kind of one level above, at least one layer above what a knowledgeable human would write. Um, so I will that's a TBD. Um, Terry, what are you seeing? I think one of the things, let me preface, one of the things that has been in the conversation is the idea of really leaning into having a risk based program. And that's been in the literature for a long time, but the regulators couldn't figure out how to assess it. So therefore they sort of blew past it, always saying, well, you got to have it be risk-based. But then whenever they found something they weren't comfortable with, it just somehow fell outside the risk parameters, even though they were supposed to be your risk parameters. But now, as we lean in, I think customer risk rating, most institutions were doing some form of it, but I think there's a lot of review and hopeful effort to refine that. Terry, what are you seeing in your with your clients in terms of how they're using technologies to try to enhance their client risk rating process?
And they definitely get on board. It mostly starts by feeding it information and having it, spit out a risk score at you, which is going to tell you if you need to do enhanced due diligence or not. But more sort of constant feeding too. So I've seen firms implement, customer risk rating that is continuing and feeds off of transactional information or feeds off of negative news feeds and may actually continuously update the customer risk rating, or at least provide alerts to tell you that there may be a change to this customer's risk rating and it needs to be reviewed. So it becomes almost more like transaction monitoring and not just like a static exercise that happens once at onboarding and then maybe at the periodic review cycle, which if you're not high risk doesn't happen all that often. So I think it's become more of an ongoing thing using more data points than originally thought. So I mean, I don't know if you all are implementing those, but that's what I'm starting to see, especially for firms that are now in the process of upgrading systems.
So Jonathan and Corey, before we leave resources and technology, a question came in about whether you'd be willing to share which AML systems you are using.
Yeah, yes. FISERV, Financial Crime Risk Management, FCRM.
We also have an instance of FISERV FCRM, which handles kind of the general, most of the retail bank side. And then we have SAS for AML alerting in our commercial bank, and enterprise case management from Oracle as our case manager SOAR filing system on the commercial bank side. Integrating everything into SAS and ECM, knock on wood by this time next year.
Can I ask a question? Are those for AML monitoring? Are you using something different for fraud monitoring, which tends to be more preventive, stop it up front as opposed to report it on the back end?
I'll defer to Corey to start at least, yeah.
Yeah, FCRM is not for fraud.
Right.
Now, FISERV does offer a fraud platform. We don't use that. Again, our fraud program is in its infancy, and we are using Argo Oasis, particularly for their check fraud monitoring, because that was a huge hotspot in our bank for losses. They also do offer some ACH fraud monitoring, and I think some wire as well.
Yeah, and I'm again, we are separate, and the fraud monitoring is handled by a group in the first line at our institution. My understanding is that that data is fed into FCRM and kind of expresses itself in FCRM, but off the top of my head, I'm not sure what system we're using.
Yeah, I mean, they're not totally devoid, right? Because if there is fraud, you still have to report it in a SAR. So there needs to be an interaction between the two teams. So, but there is, obviously preventive concerns about fraud. I've seen, you talk about sort of maintaining your records for what you don't file on. I've seen banks getting sued by clients who have been defrauded by another one of their customers. And the question is, did you know what was going on? And do you have records to show that you knew what was going on? So, all that is very critical for many reasons.
So we had a comment come in related to our discussion about AI and writing, and I'll just read it. SAR writing. I agree about the AI SAR writing. However, I've had good results from creating a custom chat that adopts my writing style. It ups the professionalism of the language. So
sure. I mean, I think the use case. Oh, sorry, Corey.
Yeah, I'm probably going to say the exact same. It all starts, like you said, with the human. You have to feed it the right stuff, and I think it can get more sophisticated. And sometimes sometimes this is where I think it could help as well, because we know when we're writing SARs, we are writing for a law enforcement audience, right? We are not writing for other bankers. And sometimes, because we're so in it, I think that AI could help us with our wording sometimes to make it a little more simplistic and get the point across there. What do you think, Jonathan? I think it could be
I don't disagree with that at
Yeah.
all. Yeah, I'd say right the very tailored kind of one person chat bot, we'll call it, because I don't have better terminology. Right, there are really narrow tailored use cases where generative AI is great. It's fed really good data. It's able to produce at least good outputs, right? So it's certainly right. It has its applications. But yeah, I mean, in terms of cleaning up writing, clarifying things, right? People are human. People are trying to get through stuff fast. The faster you're trying to get through, the more jumbled things can get. But the biggest drawback to me with the generative AI in particular is, and not to soapbox, but right, what is it doing to our critical thinking, and what is it doing to, right? A thing gets spit out in a minute. You can take 10 minutes to review it, or you can click fine and move on. I mean, I think we're seeing anecdotes about lawyers doing that in lawsuits, and they're citing cases that don't exist, this or that. So yeah, my biggest concern is, yeah, what it does to the people on the other end, and does it really allow you to kind of just push stuff through without thinking about it?
Yeah, valid. That's valid.
Complacency is bad. So
It is bad.
So I want to take 5 minutes and get your reaction or your insights rather into what we can be doing to interdict uh, insider activities. There's been I think a spike actually statistically, but also we've seen a lot, at least a lot more disclosure of frauds and other things, money laundering as well, by insiders. And so, Terry, I want to start with you. Um, what do you see your client, or what are you recommending to clients about ways to, uh, I guess I'd say, build better mousetraps?
I mean, it's a challenge because insiders often know the ways to circumvent the mousetraps, right? Because they're there. But the sort of obvious ways are access controls and back-end checking, to make sure that the person hasn't accessed something they're not supposed to, and that the accounts all tie out. I've seen banks also, sort of, do you require your employees to bank at your bank, which means that their accounts are being monitored through your monitoring system as opposed to elsewhere. So, like, if you have an employee who's taking bribes, but the money's going someplace else, you won't see it. If it's going into your accounts, you might see it. You know, it is a tough one because access controls can be circumvented, but those are, I think, the prime. I don't know if you all are using those as well, but it is a challenge, and it is definitely a focus for the examiners.
Jonathan?
I mean, in any of the instances in insider abuse that I've seen, right, there's an access control issue, whether it be they were never switched roles, nothing was updated appropriately, or just, no one was looking. So, right, making sure all those controls are in place, ensuring that you have people kind of up and down the chain that are right, comes back to people, right? You've got the people in place to police this stuff. And then the disincentivizing, whether it be, if the opportunity is there and the economic circumstances are such that people are going to feel like, hey, they got to do it, they have the opportunity to do it. Employers out there, pay your people, I guess, right? That's one. If they don't need the money, they're not necessarily going to be out there looking to steal the money, but there's always going to be people poking, prodding, and it's tough, right? Yeah, because the insiders do know the ways around the traps, and in some cases are the ones that laid the traps.
Corey?
Yeah, so policies, procedures, access controls. Yes, I co-sign on all of those things. Everybody's already said, talk to your internal audit or your third-party audit firm, because they can also help you with either doing those employee account reviews for you, or like in our institution's case, we can do it. We can build rules based on it. Like Terry said, if your employees are banking at your bank, then you can set up rules within your AML monitoring or your fraud system, whichever, take your pick. And if you have employee accounts that are noted, earmarked somehow, then you can build rules around some of those scenarios, that common scenarios that you see, like maybe bribery if you're looking for something over a certain amount, excluding their payroll, right? So you can set up rules like that. You can have those things in place. And I think it's also really important that you and your HR team also have a very good working relationship together as well. I think that building that communication and that relationship, that they understand what you do and what you could be seeing on your end, and then how they want to address that on their end as well.
That's a good point with the HR and all the internal groups. I think of this as kind of a hub and spoke model. There are so many different groups throughout
Yes.
an institution that might
Right.
touch on some sort of insider abuse. So simply figuring out who's going to be in the middle of a process, who are they going to rally up,
Yes.
and do they know who to rally up and
Yes.
when? That's something that we're kind of constantly working on. Thankfully, we're not in the middle of the hub in the FIU. We're one of kind of the spokes. I appreciate that. We get to focus on
Mhm.
BSA angle. But often where there's smoke, there's fire, right? And the more people you bring to bear on an issue, the more you're going to be able to figure out. The diversity of viewpoints are going to ask all the right questions. But it does take typically a larger group. In terms of concrete feedback, is again as simple as it is, at least from what I've seen, it's cash. Comes back to cash, big cash deposits, big cash withdrawals, rapid in and out. So again, it comes back to your pretty straightforward, pretty simple AML kind of understanding, or just financial crimes understanding. And on the insider angle, A, being able to flag it in your system as, hey, this is someone that works here. And then
Yes.
B, knowing how to route that to the right people, knowing how to get the information to the right people so that you can then take additional action where appropriate.
Right. Training is important too, because it's like you train your employees. If you see something, say something. I mean, it's the same thing. If they see somebody in their group that's doing something that doesn't appear to be just right,
Yeah.
they have the
Yeah.
opportunity to report it if they understand what to do.
Or the flip, I think you get a lot of, it's just how it's been going for 15 years, right? We had one person doing five people's, roles, and that's why they were roaming around in the way that they were.
So we're heading to the end of our time. The last topic I want to be sure we get to is kind of the interacting with the board and executive management. And Corey, I'm going to start with you. And while you're talking about how you do it and how you recommend people do it, we did have a question earlier when we were talking about AI, and you mentioned you were going to be talking to your board about AI. The question is, what are you taking? Are you taking a policy or just informing or whatever? So, Cora, if you could start out with, how do you deal with the board and executive management? I think it's important to frame the question as, remember, for all the work that everybody does on the ground, it's the board of directors that's ultimately responsible. I can't tell you how many times I said that to boards of directors over the
Yeah.
years, but and and it's something they're not expert in, and we don't expect them to be expert, but we do expect them to understand, and there's a distinction there.
So it takes time to build that relationship, and I think with the basis of any good relationship is trust, right? So for how many ever years you've been in your role, or even if you're just starting in an AML officer type role and you're getting introduced to the board, I don't think the expectation should be on your first meeting, you're going to go in and you're going to tell them all the things that we need to change and we need to do and everything. You have to take the time to build the relationship and build the trust. You also have to understand what the culture of your institution is, how things are done, what the culture of compliance is that you're going into, and you have to tailor your approach to that. But one thing that's always been a big thing for me is not only just the monthly communication. So whether they see me in person or not every month on their board meeting, they're going to get a report from me. And of course, they're getting 1,000 pages in their board meeting every month from a lot of people, but I make sure that they see me no less than 2 to 3 times a year, face to face. I am in the meeting. I do annual face-to-face training with them. And guess what? That's not something that I made them do. They asked me to do it because I built that relationship with them. They're like, we'd much rather have you come in and talk to us every year than doing those online trainings. And I'm like, wonderful. I think that would be more beneficial for you anyway. So again, it goes back to that relationship that you've built with them. So FaceTime, talking about what's going on. I will be going next month. I will be talking about AI, but not in the sense of we're, a policy. There's not going to be an AI policy because we don't have any AI in place right now. So I'm not going to build a policy until I know what exactly direction our bank is taking. But telling them what I've learned from the demos that I've attended and from the feedback I've got from vendors and then colleagues as well. We're going to just have a discussion about it, just like we're having right now. We're going to talk about it. And I'm going to say a lot of the things that I already said on this call about where I see AI could help us in our institution and what that really means for them. So that's what I'm planning to do next month. But one of the most impactful things that I think that I do with the board, because I always tell them, I'm like, you have to connect. I'd love you to connect two things, but you have to connect to one about AML and BSA in general. You have to connect at least to the part that there's a regulation and we have to do it, and here's why. So you have to connect to that if you're on the board. But I want you really to connect to the second piece is like, how is it helpful? How are we helping our customers, our communities? How are we helping law enforcement? And the way that I do that is when I go do my annual training, I take case studies from our bank, ones that we have definite where customers were prosecuted as a result of a SAR, where we saved an elderly customer. We got their property and their land back because they had a bad POA, and we were able to catch that, and we were able to get law enforcement involved and help them. So I take those unique to that year case studies from our institution, and I get them to connect in that way. And that's been really helpful. They have given me the feedback that that's their favorite part of the training that they get each year is what we've actually done in our communities to help. So that's a long-winded
Jonathan,
answer. Go ahead.
I'm sorry. I just want to be
No, Corey's got most of that one. Thankfully, it is a little bit above my pay grade on that
okay.
point. We do produce regular reporting, but it kind of comes back to just building credibility, right? You want to show that you know what you're doing and that what you're doing has a point. Dollars and cents, quite simply, put a really fine stamp on that. Whether or not you're aggregating it in the whole, or Corey, if you're just picking out specific examples of this is what we did here. Conversely, if something goes wrong, hey, we did not put this in place. We did not invest here. Thus, this is what happened, and this is why. So, then being flexible, right? I think people want to go in guns blazing a lot of time, and this is just kind of general relationship building, right? Everything is a give and take. Remembering that you gotta meet in the middle somewhere to get anything done, and
Yeah.
your opening position generally can't be your ending position, whether it be resources, tech, people, all that. So yeah, leave it there.
Terry, 30 seconds.
Yeah, two quick points. One is your board has to approve your policy, so they need to understand it to some extent, right? And the other is show them the enforcement actions, because the recent enforcement actions and not so recent ones put responsibility on the board, and the board has to create a compliance committee to oversee whatever the remediation is. So at the end of the day, it's their throat is the one to choke, right? So they're responsible as well as management.
So we've run out of time. I want to thank all three of you for your thoughtful insights and the practical guidance. I think you've done a great job of talking about how things really are and how to think about things. We want to thank all of you in the audience who joined us today. We hope you found the discussion valuable and thought-provoking. If you'd like to revisit today's session or share it with your team, the recording will be available soon on our AML Voices webinar page at amlrightsource.com. In November, we'll discuss global regulatory trends in financial crime compliance, and that session will be streamed on November 20th, so it won't interrupt your Thanksgiving. At 1 p.m. Eastern Time, you can register for the November webinar and check out our other resources at amlrightsource.com. On behalf of all of us at AML RightSource, we want to thank you again for being with us. Stay safe, stay compliance, and we'll see you next time on AML Voices.
Thank you all.
Ciao. Thank you.